Hey, what's going on, guys? Joe here, and it is time to trade and get paid. Have you ever looked at a pattern and thought to yourself, like, I think that's a really good trading pattern, but I'm really not sure how to execute it exactly? Or maybe you've seen some videos that have kind of explained like what something is, but really didn't show you how to use it. Well, in today's video, I'm going to show you how to trade cup and handle patterns, otherwise known as teacup patterns, and how to get maximum profit out of those patterns. So let's jump into it right after this intro.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
All right, guys. So let's jump into it. I'm gonna show you what a teacup is, or a cup and handle. And really, what we have to understand is that every pattern has, like a life to it, right? It has a sequence to it. There's a reason why something's happening. We got to get out of the mentality of like this is what we see, and so we just react to what we see. We need to really start understanding why something is happening so that we can go ahead and get ahead and let the market come to us instead of chasing the market, okay? So first thing we have to understand is that a teacup can be bullish or it can be bearish. So a teacup that is bullish is simply called a cup and handle or a teacup. A teacup that is bearish would be an inverse teacup or an inverse cup and handle. And really it would just paint on the chart upside down, essentially. The second thing we need to know about a teacup or a cup and handle pattern is that it's a continuation pattern. And what that means is that it's going to, we anticipate it anyway, to go in the same direction that the market is already going. So the first thing we have to do if we see something that we think might be a cup and handle is that we have to identify which way the market is going previous to the beginning of the cup and handle. Because remember, sometimes we can see a move that we think that the market is going up, and really it's just, when we see this move here, we're actually seeing a down move, an up move that okay, here it is, but really it's just a pullback on a much bigger down move. And so what we really need to understand if we're going to trade patterns is we have to understand that we're looking at continuation in the direction that the market is already going in prior to the pattern beginning. So a teacup, first of all, is going to start with a high. It's going to end up looking just what it sounds like. It's going to be somewhat of a rounded bottom, and then it's going to have a handle on it that generally comes about 50% of the total move. Once we see that happen, when we see that handle, we generally see a rejection there, and we do what's called filling the cup. And then from there, we scale out of the trade by, seeing long potential from there. Okay. So the thing is imagine if this was coming from this way. Is that a teacup? Well, no, it's not, because it came from a bearish direction. Now, if we see that same thing coming from this direction, then yes, that can be a teacup because it is a continuation pattern. We would have a low, a higher low, and then a higher high coming up to the top. Anytime we see patterns, really it's just complex ways to look at market structure. Another example of that would be a head and shoulders pattern. We see a move up, we see a move down. And really, if we split that in half, if you look at it, it's just an up move followed by a down move. And it's a head and shoulders because it has two shoulders and a head, right? Well, the teacup is very much the same way in that we're seeing movement, we're seeing a round bottom, and then we're seeing movement. And so we're seeing a low, a high, a higher low, and a higher high with all of the, you know, movement that happens in between each one. So now that we know that, now that we see that, let's look at it from a bearish direction. If we see movement coming this way, and then we see a move like this, and a move like this that generally will test this area here, we could very well be seeing a cup and handle forming to the downside, which would essentially be high, low, lower high, lower low, with just all of the movement in between. So that is what a cup and handle would look like. Now let me explain the breakdown of what a cup and handle is. A cup and handle consists of three things before the breakout. That is market structure: a downtrend, a base or a consolidation or a range, followed by an up move. And so essentially you have a move down, a sideways move, and an up move forming that rounded top, that rounded bottom. And when you see that, essentially what you're going to have here is from the low to the high, you could drop a fib on that and you're going to see a 50% rejection, a retracement. It don't always go to the 50%, but that's pretty normally what it does. And then we would take it and we would fill the cup, and then we would look for breakout there for a longer move. So the same thing on the bullish side, we would see that a bullish or an inverse cup and handle would be an up move, followed by some sideways movement, followed by a down move, and then the handle. So again, forming that round shape there. Okay, so that's what a cup and handle does. That's how we execute a cup and handle. Essentially recognize, let me say not execute, but recognize a cup and handle. Number one, it has to be coming from the direction. It has that rounded bottom. It has a handle that retraces. And then we see the breakout. We fill the cup. If it fills the cup, we get a breakout here. And that's a really good entry point from the other side of the cup. So those are the characteristics and how to recognize a cup and handle. Now, how do we trade a cup and handle? Well, if we see movement and we see the cup and handle, we see a cup forming, well, first thing we want to do is a lot of people would want to sell from this direction. And while that may be fine, you may end up being able to do that, selling from this direction to kind of catch that handle. That's not the best move, because many times there's another pattern called a rounded bottom. And what would happen is you would see this same move that just won't have a handle. And it's essentially what it will do is it will come here. It'll look like it's retesting, but it'll just take off and pull this whole rounded move. And so it can be very easy to get faked out right here if you try to sell to catch the handle. So I would recommend not trying to sell to catch the handle, but being patient and waiting for the handle to form if you're going to trade the pattern itself. And then what we can do is find rejection entries here. Things like pin bars or engulfing candles. You can see those candles form in here. And when you see this level rejected, you'll bring your fib from the low to the high and get that golden zone. When you see the pattern or the price from the pattern, from the handle, start to reject that golden zone area and start to form maybe a candlestick or something that shows rejection, like a pin bar or an engulfing candle, what you'd want to do is you'd want to enter from there. If you see, let's just say, a pin bar that closes above the level, you'd want to enter there and then trade to fill the cup. That's one great way to trade it. Generally for a scalp or a day trade, that would be a great entry. And then once that happens, once you see that happen and price has filled the cup, at this point here, we also get another great entry opportunity. And what we would want to do with that is we would just want to drop a line at our previous high at the beginning of the cup and wait for that to retest. So all we would really do is just wait for that right here. And the same thing we looked for here, now we're looking for here. At the retest of this area right here of the top of the cup, you'd be looking for a pin bar. you'd be looking for an engulfing candle, you'd be looking for a close above or something of that nature, some type of an entry signal. And from there, you would take it up to previous structure. Generally, you want to see on a cup and handle, you want to see 1 to 2 minimum, and really generally about 1 to 4 on your risk reward. So if you were to enter the market right here on an entry candle, okay, what you'd want to do is you'd want to put your entry right here at the next candle. So you'd open up at the next candle after your rejection, okay, your retest rejection. Then you'd want to set your stop loss below here. So if you look at that, you can take your stop loss and set it just below where the low was here. That's for a swing trade. If you're looking for a scalp, you would set it behind your entry candle. So if you have a pin bar or an engulfing right here, you would set your stop loss behind the candle. If you're doing a scalp or day trade, if you were swing trading, you would set it behind your handle. From there, you'd want to look for a target that is 1 to 4. So let's just say you got to look at you have to look at market structure. You can't just guess. So if you were to drop a signal or a entry right there, you come here and you see you'd want to get a good entry point. So if you were looking like this, you would want to come up here and you'd want to put a 1 to 4, and that would be your target. You'd set your target up here as long as it made sense with market structure. So you would look left, make sure that that is confirmed with market structure, and that would be how you would enter that trade. What a great opportunity that would be. And then from there, we would generally see where price will retest off of here and then take off to the upside. And really, again, it's just low, high, higher low, higher high with the rounded bottom. And really what's happening here is we're seeing the market going ahead and gathering before the next push up, because, you know, we have to have supply and we have to have demand if we're going to have execution at the higher price point. Now, very quickly, let's look at it on actual candlesticks. And you can see here, which is why I'm doing this video, you can see here that we're looking at the GBP AUD 30-minute chart, and we look like we could potentially be having a cup and handle right here. And it looks like the handle may already be forming. You can see it here going down. This is live on the chart. And so let's make sure that all the confirmations are here. First and foremost, zoom out. Is this coming from the same direction? Do we have this coming from an up move? Well, yes. You see that it comes from all the way down here, and we have strong upward movement prior to this happening. So if you were to look at this like by zooming out, what you would see would be up movement, rounded movement. Let me kind of bring that into my annotation. You'd have up movement here, you have round movement here, and now potentially the handle forming here. And you'd really see in that 50% area, you'd see where the rejection would happen. So far, confirmation number 1 is good. We do have upward movement for this potential cup and handle. Now, we see a high point and we see structure. So we see a rejection up top and we see structure. So that's the next thing. Do we have structure? Yes. We have the down movement. Remember I said what a cup and handle is? It's really just down movement. What do we have? We have down movement. So the first part of it is a check. We have sideways movement. Check. We have another up move. Check. So we have all that we need for that to be a cup. Now, do we have a handle? Well, yes, we see the handle forming there. So how would we know if that handle is good? Well, let's just take a second and drop a fib on it, right? So we would take the fib, we'd go from the bottom to the top, and right now you see it is at the 50. It's starting to reject. We're seeing a wick form just like I said it would, and we're doing this in real time. We're seeing this right now happen on the charts. And so we would see that happen. And the next thing we would expect is for a rejection at this level here, Once we get a rejection, a confirmed rejection, we could take this back to 0, right to here, and that would be a nice little day trade. Okay, that in and of itself, you see here, let's just say we got in at the 38. I mean, look at that. That's 121 pips right there. The next thing we would do is, once structure is broken here, what we would do is we would just, remember I said drop a line. We would come back to the place right here of structure. We would drop a line here. And then once price is ready to kind of reject in this area, we would want to retest this area right here. And once we have an entry signal, we would trade it to the top. So here would be our first take profit. So if we did that, we would enter here. We would have a first take profit of 59, or let's just say 60 pips. We would have a 60 pip take profit. That would be take profit 1. We'd be able to move our stop loss into profit from there. But remember, we're looking for a 1 to 4. And so what we would do is we would take this. We would look at the entry. We would come right behind here if we're scalping. And coming up to here for a scalp, we would be pretty happy if we had 1 to 2. Right there we have 1 to 1.97, so basically 1 to 2. So for a scalp, we're looking beautiful. Let's just say we're looking for a swing trade. Then we would come down to here, and we would be looking for a 1 to 4 move. And so we would just stretch that out, 1 to 4. And so we would put a line on it. Okay, put a line there, and then look left. That's all we got to do. Do we have structure in that area? All right, we got structure. We're looking good. That does look like a nice area. We have structure in that area. So we know that that is a confirmed area. So we're happy. And now we're all set. We're ready to trade a cup and handle. That would be a swing trade. If we did take that as a swing trade, we would enter here, and we would have a 550 pip move with a total risk of about 135 pips. So we're looking really good for a swing. We're looking really good for a scalp. And everything is happening simply because we're recognizing, look at this. Look how beautiful it is. We're recognizing a cup and handle. That teacup, that cup and handle is one of the most powerful patterns that's out there. Here you see it. Here that is. You see it literally. Look at this, guys. I want to show you this real quick before we end this video. Look at this. Look how cleanly it rejected that 50. I told you that before it ever got there. I told you that it was going to hit the 50 and reject. And it literally kissed the 50 and took off and is rejecting. So this stuff works. If this closes above the 38, we're going to really like it, because you can enter the market at the 38 and, trade your way up. I don't like it at this time of day, just because it's Asian session about to be, and, higher spreads and stuff. So be careful of spreads. But if you're swing trading, this is a great opportunity for you. And that's it. So this is a cup and handle. This is how you trade a teacup pattern. This is a bullish teacup that we're seeing. Everything fits, and it looks like it's going to be really good. So I hope you get to catch the move. Let's eat together. Let's make some money. If this video brought you value, make sure you like, comment, subscribe, share it. Tell somebody that this video helped you to make some money. I'll see you in the next video.